got George Stahl to tell us about Yahoo. The chairman and some directors walking the plank. It's part of a shake-up and some new people in. Give us the specifics, and then let's talk about what it means.
Four people left, including the chairman, as you said. Two people came on. They said they're going to continue looking for two more people, probably going to be independent directors, people from the outside coming in. And obviously this follows Yahoo replacing the CEO late last year, bringing in Scott Thompson from PayPal and replacing Carol Bartz. Now the Yahoo board has gotten rid of everybody who was around during the whole Microsoft fiasco.
That's why they turned down. That's why they turned down. Just to remind everybody, in case you've forgotten, if you're an investor, that where Yahoo turned down an offer for the company that was twice the value of the company now.
Yes.
Okay,
yes.
that one.
That one.
So all the people with all the mud on them,
right?
They're gone.
And then what they did after they rejected is they brought Carol Bartz in to run the company, and that didn't work out too well either, so she
ran the company into the ground.
Well, it was pretty close already, so she didn't have far to drive.
Call this cleaning house.
Huh?
I mean, this is a clean house now.
This is a clean house now. So the question, though, is what happens next? And this had been foreshadowed that these board members were going to be leaving. There had been lots of reports over the past few weeks that this was happening. The big question is, where does Yahoo go from here? If you look at the stock, people aren't that excited by the moves. I mean, the stock is down a couple pennies last I looked today. But that's because the real action is, what are they going to do with the Asian assets, and how do they leverage money from that? Will they sell it back? How complicated a transaction is going to be? That seems to be what everybody's saying, is that to get the tax benefits.
There's a stock price now down about 0.2% there, 1580. So not a whole lot.
So that is investors are in a wait and see. This doesn't really move the ball from an investing perspective. The next step, what will it do with certain assets that will move the ball?
I mean, are investors really expecting, though, some sort of huge windfall from the Asian assets? Because the fact is that their core business is also declining.
Right.
So, I mean, even if you get a bump from Asia, where does that get you in the long run?
Right. The long run is they still have to address their core market, which they're seeing advertising pressure from Facebook and from Google. So the Asian assets will at least give them some more money to do some things,
to invest in new strategy.
And it's interesting.
But also this management distraction, isn't it? If you don't have to worry, if management doesn't have to worry about their Asian assets and they can focus on doing the job of the core assets, that will be useful too, because management time is precious as money.
Right. Although they probably don't do that much managing of the Asia assets as it is now. I mean, they probably they just benefit from the growth in that part of the world. But I think it's interesting that two of the new board members that are coming on are people who have tech backgrounds, but in running startups too, that are more nimble and more aggressive. And we'll see if maybe some of that attitude gets brought to the larger Yahoo.
I mean, look. A year ago, they were almost a $7 billion revenue company. Now they're $4, right? I mean, this is a pretty steady revenue slide. Now, I'm probably getting the numbers wrong. Maybe it was 4.5. I can't remember. But the truth is, that is not a pretty situation.
As much as right, it's down.
It's not a pretty situation. And so...
And they still have a lot of people that use it. There's still a lot of people that use their email, that go there for news and for fantasy sports leagues and stuff. It's just that Yahoo's never been able to figure out how to monetize those eyeballs.
And when they can do that, though, or if that can be done, that enormous audience, Yahoo Finance, Yahoo, and all the sub-sites, that could be phenomenal. I mean, the audiences are gigantic by any standards. I mean, somebody has got to be able to do that.
It's just, how do you do it? Because people do it and keep doing it because it's for free, and they're becoming accustomed to it. So it requires something that's a little bit more sophisticated than just charging them.
Charging is one thing. I mean, the ad revenue is the way that people have been looking at that and how to do that. And I know that there's a lot of experimentation around the web. And that's where Yahoo
struggled with Google and Facebook.
I just want to point out one thing, which is that if a television show had that kind of audience, they would be able to sell against it very effectively. Internet ad rates still dramatically lag the size of their audience. The rates that people pay to reach these audiences online are nowhere near what they pay in other mediums. And so whether that will ever be matched is a question for all internet companies.
And isn't that funny? Because we know exactly who is watching web TV, exactly how and who and how long, where they're sitting, how long they're watching it for, whether they're turning the volume on or not. And we know very little of that from TV, right? and yet the
Turns out
rates.
maybe people are willing to pay for that mystery.
So maybe
Yeah, sometimes too much information makes it hard to sell. But and ads on the internet are more interactive, so you would think that you'd have a better way to track that.